Hey, let's get rolling here today, and we know corn and beans is on everyone's mind as we head into harvest right now. But it's really the outside markets they're having the big effect on the grain and livestock market. So we're just going to bring a few things to you right here. And in front of us is the S&P chart. We broke hard in here the last couple of weeks, and today we went down to 36.39. That was also the low that we had in June. If we break below there, the 200-day moving average is around 35.88. If this thing really looks ugly, I'm sure there's going to be some talk of 3,000 to 3,200. So the S&P is in a weaker trend in here right now with a lot of volatility. The next one we're going to focus on is a 10-year Treasury yield. Federal Reserve is increasing interest rates. They're doing that to battle inflation. And when you look at this 10-year yield, right now we're basically sitting at about a 12-year high on that. Right now the Fed is showing no signs of slowing this interest rate increase, a pattern down in here right now, and they probably won't until inflation gets under control. Now, when you have U.S. interest rates increasing in here, that's also rallying the U.S. dollar, and the dollar index right now is trading at a 20-year high. It seems like when we keep on increasing our interest rates, what the goal of our Federal Reserve is to basically export this inflation problem as the cost of goods for importers from the U.S. goes up. Another market that we focused on here over the past couple of years is the lumber market. You could see the break back with COVID in 2020, and then we rallied substantially in 2021 with the lower interest rates, pulled back, another good rally in 2022, and now here over the last couple of weeks, we traded to about a 2-year low on the lumber market. To us, this is a market to take a look at with a slowing consumer demand profile. The next one we have in front of us is a crude oil chart, and in this one, the two blue lines are between $40 and $80. As you can see, that held the market, for 5, 6, 7, 8 years in there before we had the spike up in 2022. Now we're settling back into that range. We believe if inflation is going to get under control, it is energy prices that need to settle back. Back in 2018, when we had crude oil trading between $70 and $80, inflation wasn't out of control. We need to bring this cost of fuel down. It'll bring transportation costs down. That will help on the inflation side of it. As we wrap up in here today, these outside markets and the volatility that's going on there is really having a direct impact on the day-to-day trade in the grain market. We still believe a big key when you're looking at overall inflation is energy and then transportation costs. We brought up before on crude oil prices, the other transportation to consider is the container market. One that is closely watched is from China to the U.S. West Coast. A year ago, each container cost around $20,000. Today, it's down to $3,000. So not only is energy prices coming down to help transportation costs, we're also looking at this container market break as well too. So that should lead to some relief to consumers. Now we need to acknowledge the corn and bean market here a little bit, and you guys are busy harvesting. I think the thing to point out, and we've highlighted this on previous webinars, is there's no carry in this market. Look at pricing out inventory instead of paying commercial storage. The other big question we get in here is what to do on 2023. Our simple thing is if you buy some inputs, sell some crop ahead. Then the last thing we want to hit on is yield. This is just phone call to phone call. I could find a producer that's pushing record yields on soybeans and then a producer who has got the poorest yields that they've seen in the last 20, 30 years. This yield situation is really all over the board. As we target specific areas and talking to producers, we have to say these yields are coming in pretty close to expectations. Therefore, from a USDA perspective, maybe just a slight drop in yield could be expected on this October report. We got a stocks report coming out on Friday. We'll bring you a short webinar there then as well. Stay safe at harvest. Have a great day.